Warren Buffett became a millionaire at age 30. Not through inheritance, not through luck, not through a viral business idea or a cryptocurrency investment. He did it through a precise, deliberate, step-by-step process that he started at age 11 and never stopped. And in this video, I am going to walk you through every single step he took. From his very first investment of $114 at age 11 to his first $1 million at age 30. Because every American who understands this story understands exactly how real wealth is actually built. By age 17, Warren Buffett had saved $9,800 US through multiple businesses he ran himself. By age 25, he had grown that to $140,000. By age 30, he was a millionaire. By age 56, he was a billionaire. And today, at age 95, he is worth $130 billion US. The entire journey from $9,800 to $130 billion follows a path that is so clear and so replicable that every American at any age can understand it and begin walking it today. Most Americans look at Warren Buffett's $130 billion and think that is impossible for me. That is not a path I can follow. But when you look at where he started, a kid in Omaha, Nebraska with $114 and a burning obsession with understanding money, you realize the gap between where he started and where you are right now is much smaller than you think. The strategies he used at age 11, at age 17, at age 25, and at age 30 are all available to every American today. Some of them cost nothing at all. In this video, I am going to take you through 4 distinct phases of Warren Buffett's journey to his first million. The childhood foundation, the education turning point, the partnership that changed everything, and the 3 specific strategies behind it all that every American can start applying right now in 2026, regardless of age or income. Stay until the end because the last section will show you exactly what the modern version of Buffett's path looks like for Americans today. Let's get into it. This is the real story of how Warren Buffett made his first million and what every American can learn from it. Let me take you back to Omaha, Nebraska in 1941. Warren Buffett is 11 years old. His father, Howard Buffett, is a stockbroker and young. Warren has been spending time in his father's office watching the ticker tape machine print out stock prices for as long as he can remember. He has already read every book about the stock market in the Omaha Public Library. And on a spring day in 1941, he walks into his father's office and places his very first stock trade. He buys 3 shares of City Service Preferred at $38 per share. Total investment, $114 US. Every penny he has saved. That first investment taught Warren Buffett one of the most important lessons of his entire investing career before he had even earned a single dollar from the market. He bought at $38. The stock immediately dropped to $27. He held through the fear. Eventually, it recovered to $40. He sold, making a small profit, then watched it climb to $200. He had sold too early. At age 11, Warren Buffett learned patience the hard way, and he never forgot that lesson. It is the reason he has held Coca-Cola for 36 years without selling a single share. By age 13, Warren Buffett was filing his own tax returns. He had started a newspaper delivery route, delivering papers to over 500 customers every single morning before school. He tracked every expense carefully. He claimed a watch and his bicycle as business deductions. At 13 years old, Warren Buffett understood taxes better than most American adults do today, and the money he earned, every single cent, went not into spending, but into learning and reinvesting. By the time Warren Buffett was 17 years old, he was running 5 separate income-generating operations simultaneously. His newspaper delivery route, which had grown significantly, a pinball machine business where he placed machines in barbershops and split the profits with the owners, a golf ball retrieval business, collecting lost golf balls from water hazards and reselling them, a farming operation where he partnered with a friend to lease farmland and grow crops, and regular stock market investments. 5 income streams. Age 17. Every dollar reinvested. By the time Warren Buffett graduated high school at age 17, he had accumulated $9,800 in savings in $1,947. That was an extraordinary amount for a teenager, the equivalent of approximately $130,000 in today's money. He had not inherited it. He had not been given it. He had earned every cent through hard work, multiple income streams, obsessive saving, and careful and he was just getting started, because the next phase of his journey, the education phase, would change the trajectory of his entire financial life. Let me take you to Columbia University in New York City in 1950. Warren Buffett is 19 years old. He has already been rejected by Harvard Business School, the most prestigious business school in America. But instead of giving up, he discovered something that changed his life forever. He found out that his hero, the man whose book, The Intelligent Investor, had already transformed how he thought about money, was teaching at Columbia University. That man was Benjamin Graham. And Warren Buffett applied immediately. Benjamin Graham is considered the father of value investing, the investment philosophy that Warren Buffett would go on to use to build his entire fortune. Graham's fundamental principle was devastatingly simple. Every publicly traded company has an intrinsic value, a real underlying worth based on its assets, its earnings, and its future potential. And sometimes because of fear, panic, or market irrationality, a company's stock price falls well below that intrinsic value. When that happens, you buy, and you wait for the market to recognize the true value. That gap between price and value, Graham called the margin of safety. Warren Buffett absorbed everything Benjamin Graham taught. He was the only student Graham ever gave an A+ to in his entire teaching career. After graduating from Columbia, Buffett begged Graham to let him work for his investment firm, Graham Newman Corporation, for free. Graham initially said no. But eventually, in 1954, he offered Buffett a job. At age 24, Warren Buffett was working directly alongside the greatest value investor of the 20th century, learning, studying, analyzing companies, and applying everything he learned to his own growing investment portfolio. The core lesson Warren Buffett took from Benjamin Graham, the one that would make him his first million and eventually his $130 billion, is this: never pay more for something than it is worth. Always demand a margin of safety. If a business is genuinely worth $100 US, only buy it when it is trading at $60 or $70. That $30 to $40 discount is your protection against being wrong. It means even if your analysis has flaws, you still make money. And when you are right, the returns are extraordinary. This principle alone, applied consistently, built one of the greatest fortunes in American history. In 1956, Benjamin Graham retired and closed his firm. Warren Buffett was offered a partnership position at another Wall Street firm. He turned it down. Instead, at age 25, he packed up everything he had learned and returned to Omaha, Nebraska. He had $140,000 US saved, a crystal clear investment philosophy, and a plan that would make him a millionaire in just 5 more years. The plan was called the Buffett Partnership, and it was about to change everything. On May 5, 1956, Warren Buffett sat down at his kitchen table in Omaha, Nebraska with 7 investors, his family members, his friends, people who trusted him. Together, they contributed $105,000 US as the starting capital for the Buffett Partnership Limited. Warren Buffett himself contributed just $100 of his own money to the partnership fund, but he invested his entire personal savings separately using the same strategies. He was 25 years old. He had no office, no Bloomberg terminal, no team of analysts. Just his mind, his knowledge, and the investment principles Benjamin Graham had taught him. The structure of the Buffett Partnership was brilliantly simple. Buffett would manage all the money. He would take no management fee. Instead, he would receive 25% of all profits above a 6% annual return for investors. If the partnership lost money, Buffett received nothing. He only got paid when he made money for his partners. This structure meant his interests were completely aligned with his investors. He was motivated only by performance, and perform he did, at a level that was almost impossible to believe. In the first year, the Buffett partnership returned 10.4%, while the Dow Jones returned just 5.1%. In year 2, the partnership returned an astonishing 40.9%, while the Dow Jones fell 8.4%. Year after year, through bull markets and bear markets, through recessions and expansions, the Buffett partnership outperformed the American stock market by extraordinary margins. Word spread, more investors came. The partnership grew, and so did Warren Buffett's personal wealth, compounding at rates that most Americans had never seen and could barely comprehend. The secret behind the partnership's extraordinary performance was not complicated. Warren Buffett simply did what Benjamin Graham had taught him. He found American companies that were trading significantly below their true value, companies that the market had overlooked, misunderstood, or temporarily abandoned out of fear. He bought them at a discount. He waited patiently for the market to recognize the true value, and when it did, the returns were extraordinary, over and over and over again. The same process, the same discipline, applied consistently every single year. By 1960, Warren Buffett was 30 years old. His personal net worth had crossed $1 million US. It had taken him 19 years from his first $114 investment at age 11. But the foundation had been building the entire time. Every income stream he created as a teenager, every lesson he learned from Benjamin Graham, every year of partnership performance, every dollar reinvested instead of spent, it all compounded together until one day he crossed the line that most Americans spend their entire lives trying to reach. $1 million. At age 30, built entirely from discipline, knowledge, and time. Now let's break down the 3 core strategies that took Warren Buffett from $114 at age 11 to $1 million at age 30. Because these are not strategies that require genius. They do not require special connections. They do not require a large starting amount. They require something far simpler and far more available to every American watching this video. A decision to start. Strategy number 1, start as young as possible and never stop. The single most powerful financial decision Warren Buffett ever made was starting at age 11. Not because he was gifted, not because $114 is a life-changing amount of money, but because starting at 11 gave him 19 years of compound interest working in his favor before he hit 30. If he had waited until age 21 to start with the same strategies and the same returns, he would have been 40 before reaching his first million. If he had waited until 30, he would have been 50. Every year you delay starting costs you enormously. Not a little. Enormously. Strategy number 2, find a mentor and learn directly from the best. Warren Buffett did not figure out value investing by himself. He found Benjamin Graham, the greatest investing mind of the era, tracked him down, and learned directly from him. That mentorship compressed decades of potential learning mistakes into a few years of focused education. In 2026, every American has access to mentors that previous generations could never have dreamed of. Warren Buffett's annual letters, 60 years of them, are available completely free on the Berkshire Hathaway website right now. Warren Buffett's annual shareholder meetings, where he answers questions for hours, are recorded and available online. His interviews, his books, his quotes, his entire philosophy, accessible to any American with a smartphone and an internet connection. The knowledge that made Warren Buffett a millionaire at 30 and a billionaire at 56 is sitting in the palm of your hand right now. The only question is whether you will use it. Strategy number 3. Build multiple income streams as early as possible and invest every single dollar of profit. Warren Buffett did not rely on one income stream to build his first million. At age 17, he had 5. A newspaper route, a pinball machine business, a golf ball business, a farming operation, and stock market investments. Each one generating income. Each income stream reinvested immediately. In 2026, The opportunities for multiple income streams are greater than at any point in American history. Freelancing, online businesses, dividend stocks, index funds, side hustles. Every American has the ability to build multiple income streams. The ones who do and reinvest every dollar are the ones who build real wealth. Now, what does Warren Buffett's path to his first million look like for ordinary Americans in 2026? You do not need to run 5 businesses at age 17. You do not need to get into Columbia University. You do not need to start an investment partnership, but you do need to apply the same 3 principles that made it possible. Start now. Find your education, build multiple income streams, and invest every dollar you can, consistently, for as long as you possibly can. Here is what the modern Buffett formula looks like in real US dollar terms for Americans in 2026. If you invest $500 US dollars per month starting today in a simple S&P 500 index fund like VOO earning an average 10% annual return, here is what happens. In 10 years, you have approximately $102,000. In 20 years, approximately $382,000. In 30 years, approximately $1,130,000, 1.1 million US dollars. From $500 a month, consistently, without any special knowledge, without any extraordinary luck, just the same compound interest that built Warren Buffett's fortune working for you. Here is your exact action plan as an American investor in 2026. Step 1. Open a Roth IRA at Fidelity, Vanguard, or Charles Schwab today. This is your tax-free wealth-building vehicle. Step 2. Set up an automatic monthly contribution 2V or VTIA. Simple S&P 500 or total market index fund. Step 3. Build at least one additional income stream. A freelance skill, a side business, an online service, anything that generates extra cash to invest. Step 4. Read Warren Buffett's annual letters. All of them. They are free, they contain everything he knows. And step 5, never stop. No matter what the market does, Warren Buffett made his first million at age 30 because he started at age 11. He had 19 years of compounding working in his favor before he hit that milestone. You may not be 11 years old right now, but you are younger today than you will ever be again. Every day you wait is a day of compounding. You lose forever. The Americans who start today, who stay consistent, who build their income streams and invest every dollar will look back 20 or 30 years from now and be amazed at what that decision was worth. Start today, right now. After this video ends, let's bring it all together. Warren Buffett made his first million at age 30 through 4 distinct phases. The Childhood Foundation, starting at age 11 with $114 and building 5 income streams by age 17. The Education Turning Point, Learning Value, investing from Benjamin Graham at Columbia. The Partnership, launching the Buffett Partnership at age 25 and outperforming the market every year. And the 3 core strategies behind it all: start young and never stop. Find a mentor and build multiple income streams while reinvesting every dollar. Here is my challenge to every American watching this video. Do one thing today that Warren Buffett would have done at your age. Open your investment account. Make your first contribution. Read 1 chapter of The Intelligent Investor. Start researching one side income idea. Just one thing today, because every great fortune in American history, including Warren Buffett's $130 billion, started with one decision. On one ordinary day, drop a comment below and tell me what is the one thing you are going to do today. I read every comment and will personally reply. Every good financial decision you make today, your future self will thank you for. The best time to start was yesterday. The second best time is right now. If this video helped you understand exactly how Warren Buffett made his first million hit like and share it with one American who needs to hear this story. And if you want to know why Warren Buffett drinks 5 cans of Coke every day and still has $130 billion, and the 5 money lessons hidden in every can, that video is right here. See you there.